Very good morning, everybody, and welcome to this week's weekend review. So, this week, like I had promised last week, and many people have asked for it, we will be looking into the case studies, which are kind of diamonds in the dust. So, with the recent correction, those businesses where the performance have been good, but the price has been beaten down, we will look at it. Plus, with the impact of budget, we'll try to align it with the sectors where we see गुड मूव्स आर गोइंग टू कम अप राइट। सो बजट के बारे में आपका क्या ख्याल है? ऐसे बहुत सारे वीडियोस आप पहले ही देख चुके होंगे, तो मैं उसके बारे में ज्यादा बात नहीं करूंगा, लेकिन एक सीधी सी बात आपको मैं बताऊंगा कि बजट कैसा रहा, इसके लिए आपको किसी के पास जाने की जरूरत नहीं है। अगर ठीक से आप खुद ही चार्ट्स पे मूवमेंट देख ले, किन सेक्टर्स में स्ट्रेंथ आई है, वही आपको बहुत हद तक बता देता है कि किस सेक्टर्स के लिए बजट पॉजिटिव रहा है। ऑन द पार्ट ऑफ अ सरप्राइज आई वुड से दैट डिफेंस सेक्टर्स के लिए कल वर्बली कुछ कहा नहीं गया था ड्यूरिंग द स्पीच, लेकिन बाद में जो कुछ भी मैंने चेक किया, देर इज अराउंड 10% ग्रोथ दैट इज देयर फॉर द डिफेंस बजट एलोकेशन, जिसमें से ये 14% जो है वो जा रहा है इंक्रीज टुवर्ड्स द पेंशन। सो there's a bit of an impact over there in terms of defense, which doesn't look to be that negative as it was being thought, because उसके बारे में बात नहीं की गई थी, राइट। तो ओवरऑल देखेंगे इस हफ्ते किस सेक्टर्स में कैसा मूव्स चल रहा है, ओवरऑल मार्केट कैसा है हमारे लिए, कि हमने नया पोजीशंस लेना चाहिए नहीं लेना चाहिए, उसका एक अंडरस्टैंडिंग बिल्ड करेंगे। सो लेट्स बिगिन विद द एक्शन। So, as always, the first thing that we are going to go through is my declaration. I'm not a Sebi registered advisor, and that's why whatever I am sharing over here is please to be considered as only a part of learning that I am sharing with you. My primary goal over here with you is to give you an idea that how systematically, just looking at a data, we can take decisions in the market without being subjective, without being dependent on anybody else. That is the overall goal that I'm having. And with the regulations that I'm coming in, I'm definitely not going to talk about the price charts and all that, because that has been made prohibitive. And we'll be typically talking about the fundamentals about the stocks, where I see there is a good amount of analysis that you can do and figure out whether it is good, bad, or ugly for yourself, right? So remaining within those boundaries, we will continue with our discussion. Definitely, we are fine to discuss with indices, so we will continue to discuss over them. But when it comes to stocks, it is more that we'll be looking at the fundamentals. Price part, definitely, I will leave it up to you to figure it out, because me bringing up price charts which are 3 months old doesn't make any sense over here. It is going to give you a totally a wrong picture, right? So let's continue over here and move on with our weekly understanding. So हाउ हैज दिस वीक बीन? तो ये हफ्ता हमारे लिए कैसा रहा? तो इसके लिए सबसे पहले हम देखते हैं इस हफ्ते में सबसे ज्यादा मूवमेंट हमको किसने दी है। लुकिंग एट ऑल द एसेट्स, वेरी इजीली यू कैन फिगर आउट दैट चाइनीज मार्केट इज द विनर। एंड व्हेन आई रियली लुक एट इट्स चार्ट, it is something where I am still not able to get confidence, mainly because most of the move is related to the deep sea and other AI initiatives which are coming out of China. So there is not much talk about the government funding or the government trying to revive the economy. It is very much running around still the story of DeepSeek and AI. And that is where I'm really not sure about whether this move is going to last for further time. I would let it gather more strength and maybe take a call if it picks up onto the strength. So this is an asset which I'm observing, but not acting upon it, right? What else has moved well? Gold bees, as we had discussed around 2 weeks ago, that is what it shows here. Within 20 days, it has given us a 6% return. So if you look at it, a monthly return of 6% and try to put it on the annual basis, this is fabulous return. This is running at around a percentage of around 45 to 48 percentage for the year. Now, this is where it is important that have a global perspective. Do not really get stuck with the Nifty with the Indian stocks. Try to come out of it, and more so when Nifty is not performing. So that is what is the major gathering that I can see over here is that gold bees, as the charts also tell us, they are moving pretty well. Just to get a better idea, let me move up to the closing price understanding, and there I can show you all our entry points that has been till now was around this point, and from there the prices have been moving and the gold is becoming pricier, and that is what is helping us. It is actually at the all-time high. Now if you are going to ask me, should I go here, I'm not going to go here now. Whatever I am holding, I'm just going to continue till it is going to show me the strength. That is the simple. As always, try to, that is what I tell, when working with me, typically try to focus more on your entries. Try to focus more on your entries, because exits are something which the market is itself going to tell you. Taking the entry is very critical. A bad entry can still be recovered by a good exit, but you can never recover the loss that you would get due to a bad exit. So having a good entry is very important, but even if you miss it, a good exit can save you, because if you're correcting yourself sooner, the losses are not going to happen. But if you have a bad exit, even a good stock which was rallying, and if you continue to hold for too long, is going to give you loss only. So mastering the art of exiting is very important, and that is something which I leave it to the market, because market tells me very easily. But when it comes to entry, that is where there is a lot of study that I do. Exits is a more a part of a discipline, and entries are a more a part of your studies. As simple as that. Define your rules for exit. Whenever those come, plan for an exit, move out. But as far as entries goes, that is where you have to become very cautious. That is where your risk starts. Got it? So this was about gold. We continue to hold, we continue to move along with it. And while you can see the strength, or what you can say, the relative gain that we have gone. On one hand, Nifty has been down by 0.5%, half a percent, but on other hand, gold is up by around 7%. So relatively, you can see there's a big distance that we have covered within this 1 month. And avoiding ourselves from the frustration of the falling market. So gold is working out pretty well. As far as the Indian market goes, typical scenario that we are having between Nifty, Nifty Bs, basically the Nifty mid caps and small cap. Uh, I think just looking at percentages tell you that the stars are aligning well for a recovery. I would say stars are aligning well for a recovery, because whenever market crashes and recovers, whenever market crashes and recover, you will find that the leader is the large cap, followed by the mid cap and then the small caps. Why? Because typically this tells you that people are now oriented towards being safe. That tells you that things are being thought through, people are thinking, then they are taking positions. This also tells you that big players are active in the market. Big players, they would not work that much in small cap, they would not work that much in mid cap. Why? Because the whole liquidity itself limits them. The kind of money they want to pour in, they cannot do it in a mid cap or a small cap. They will try to get along with the large caps. And if the large caps are growing, there is a high sign that big money, long term kind of a money, a thoughtful investment is coming into the market. And this was the same status that we had last week also. If you remember, when we were looking at these our riskometers, this was the same status. We had the Nifty large cap showing a higher momentum, mid cap smaller, and the weakest was small cap. Same is the situation now. But the beauty here and the good thing here is that the share of stocks which are in positive momentum in the large cap has grown. Now, this is something which is looking at, I would say around 33% cases are there now where we are having the momentum which is positive. 60%, 66% is something, two-third I am thinking is still negative. But good thing, the things are flowing into the large cap and people are risk averse from small and mid cap. That means that sensibility is returning to the market. And from here, the strength will go in the reverse order. How? We will find that more of the large caps get positive, but then slowly, the mid caps and the small caps will become more aggressive. So when this pyramid reverses, no, that the small cap is running faster in higher in momentum, then the mid cap and then the FMCG, understand that there is aggressiveness in the market. Be cautious because here the things can slip off. So at the peak, you will observe in between the rally, what is going to happen is your small caps are going to run very fast, then the mid cap, and then the large cap when the real rally begins. But as far as foundation work is going around, that time the large cap is going to be stronger compared to the mid caps and small cap. And this is the right setup where we have arrived. Now there will be a difference of opinion. People are still showing me graphs that, if I compare GDP versus the market cap, if I compare the valuations, if I compare the gold and the Nifty and all that, all those graphs are still coming in, which at times are talking about bearishness and all that, but I'm really keeping them aside because on the charts also I'm seeing that things are improving, things are getting better. Are they good enough for me to act? So personally, what I'm going to do is that I'm going to act in bits and pieces from here. Okay. Now this is something which comes under my bottom fishing strategy. This doesn't come under my trend following approach. This doesn't come under my breakout momentum approach. Believe me, this is just coming out of the bottom fishing approach where levels of cautions are high. So my entries are going to be more measured and highly selected because the probabilities of losses here is still high. So betting big will be a risk. Betting on very, I would say, not well researched stuff, betting on something which is, I'm really not having high conviction is not going to be helpful for me. So what I'm going to look at something where I'm more confident, which is be very selective, and then also go with a partial loading. That is the kind of an approach that I've started taking up from here. Now, these are the discussions more happening in my community around bottom fishing, around trend following, as well as breakout momentum. And that is where even other vibes are coming in that, this thing is slowly building up. And that is what helps you. If you have a community with you, if you have a group along with you, those communications also give you an idea that, yes, there is a sense of stability coming in. But stop loss are my best friends. Stop losses are still my best friend because we are in a bearish market. If it slips off, I'll be out. That is what is still the plan. But yes, I will say that strength is coming in. Partial allocations have been started, right? I cannot advise you because I'm not Sebi registered. Make your best judgment. I can give you the inputs on which you can do your own analysis. Okay. So this is what it is that Nifty is stronger than the mid cap and then the small cap. As far as silver goes, if you were part of my last video, we had discussed about a breakout happening here. And thankfully enough, the breakout has happened. So we have moved out of this consolidation base. Many people rightly told last time that, sir, this is something which was the case of the kind of a VCP formation over here. We had the breakout, we had the retest, and we are moving up. So typically in this case, I took my entries around the retest, frankly. I did not attempt it over here. I don't know, just maybe I was too busy with what the volatility I was seeing in MAFANG, or I was seeing good return in gold, so I was sticking to it. But here onwards now the entries are in and we are tracking this with a clear stop loss, intent to hold till it doesn't weaken. Simple. I never work on targets. Market gives me the indication that when I have to move out, and that is where I'm going to move out, right? Let's start looking at the chart specific. If I look at Nifty, what is there? Is anything that is bothering or are the levels that I would like to watch? So here, let's go with the Nifty. So Nifty, we are going to move on to the candlesticks to get an idea about volatility and intraday stuff. So here you can see a small base that has been built. pure proper, I would call it as the short-term base that has come up over here. Okay. I would love to see a good, nice pattern over here, like a cup and handle or a VCP or inverted head and shoulder. But as of now, it is not there. Frankly, as of now, it is not there. So what is it that I can see over here? The risk over here is that, we have moved up pretty quickly and no struggle has happened, right? So while I take that the momentum is low, but the trend has started going upwards. I can clearly see, the trend has started going upwards and it has kind of broken a kind of a first level pivot also. It has broken the first level pivot, which was at around 2, 3, kind of 500, I would say. So it has broken, it is sticking its neck above it. And here, though I'm trailing here with my stop losses, I'm still expecting we should ideally get a cup and handle over here. One wave down and then a leg up will give me more confidence. Otherwise, yeah, this is a recovery. We have been really beaten down a lot. We might get a V shape also, and that might happen mainly because of the budget stuff. Now, the good thing that the budget has done is that it has really added boost to the sector which is the strongest one in a fall, which is the safest heaven in the fall. Because whatever happens, people are not going to stop buying biscuits, buying breads, buying pizzas. They are going to eat food, right? They are going to eat. They are going to have basic necessities still going for them. And then with the government's push of more affordability that is coming through, this is something which is positive and this can cause a V-shaped recovery also, but I'll be more comfortable if I get a bit of a kick down and then a move up, making this a inverted head and shoulder. All in all, for now in Nifty, I am positive, continue to remain kind of in an uptrend till I am about 2300. This is the level. So about 2300, I am in kind of a buy on the dip situation. I'm in a buy on a dip situation about 2300. If this breaks, we go down. Yeah, again, nothing to worry. Move out, start sitting on the cash. So we are currently in the buy on dip mode. Okay. So the sell on rise has gone. I feel that we are in a buy on dip mode. And that is where we see that though there was intraday volatility, still the closes have been positive on Nifty. Yesterday also it corrected and even being a kind of a budget day, it did not fall much. One big reason was that it was Saturday, so the FIs might not be that much active. So Monday, that is tomorrow, will be critical. Let's see what they do. Again, many people are having perspective that, if we had a great good budget, the FIs will be back. No, FIs do not come uh, that kind of a quick. Okay. They have been selling, they will think through, they will need more confirmations. And where is the next confirmation coming? That is coming from the monthly policy meeting, right? So the MPC meeting that we are having on the monetary policy. And that meeting, if there are still more sobs given in terms of, I know, the interest rate reduction, that will make this, kind of add another booster to this rocket of recovery. So this MPC meeting, I'll be keenly watching. If there is another rate reduction or initiative taken to add liquidity into the market, into the hands of the consumers, well and good. We can see then more confident moves. So, half confident I am for now that we are on the way up. More confidence will come if the MPC hits the ball the right way. If they also support the case, then we can really understand that this government is very much focused in getting the market boosted up and the economy boosted up, adding more into the hands of the commoners so that the consumerism can pick up. We can have higher consumption from here. So this is the story. Up to 300, we are in a buy on dip. From here onwards, real aggressiveness, I will try to build it up somewhere around these levels, 23,800. So 23,800 is my leg, the last leg from where I would say that, okay, we are done with the kind of a midterm bottom. This is now a short term. We are done with the midterm bottom and I can start playing the ball more confidently. So stop losses around 23, 22, 900, 850, 900 and buy the dip about 22 or 23, 300 and beyond 23 800 I am going to go into the mode of full-fledged buy mode. That is where we will be moving into the kind of a market which is into the momentum, the breakouts, the trend following will start working for us. So jiska mujhe tha intezar. Hopefully, if that time comes, we'll be switching back to our trend following strategy. We'll be switching back to our breakout momentum strategy. But this is a good season for starting to work upon the bottom fishing because things have gone bad, but there are fundamental reasons coming in place which give a reason that on the long term basis, this might be the worst that we have gone through. Everything goes wrong. The assumption fails if we close below 23,000. That is what is the clause over here, right? We don't know. Are we done with bottom? No. Have we started an uptrend? Yeah, maybe a weak side uptrend. I can see the momentum may not be positive. You can see here, none of the sectors, the momentum is positive. So for now, all the sectors are in negative momentum. You can see all the sectors are in negative momentum. But good thing is there that many of them are in a uptrend. So at least the negativity in the trend has gone off. So we are looking, swinging the data is showing that we have, all these sectors that I've listed around three or four are only in the negative trend. That is media, oil and gas, CNX, IT. These are all in the negative as a trend itself. But otherwise, yes, the consumption is on the top. We really don't need to run around, guys, right? It is right in front of you who is dominating the market. And that is where we have the FMCG, which is running very strong, then followed by the autos, banking, and another thing that is definitely there is the Nifty reality. So Nifty reality is still coming quite low. No, in the trend I have to go, right? In the trend, again here we cannot take it these numbers as absolute because these are all based on the index value. Okay. So that is where we are. If we really look at the weekly swipe within the sectors, things are very clear that CNX reality is in a gung ho mode. Now, CNX reality is at a sweet spot. Now, what that sweet spot is, number one, you have given money in the hands of the consumers. The income tax rates have gone down up to 12 lakhs, nothing. And even the way the slabs have moved and even the higher slabs are going to get certain uh, reduction in their taxation amount. So quite a good amount of healthy money is getting into the hand of the people. Lower end and all that will start focusing towards the FMCGs and all that, and higher end slowly will start moving into that. I can afford a higher EMI, so I can afford another better place of living. And 6 days from now, if MPC brings down the interest rates, this is just going to add more fire into the movement in reality. So reality, the momentum is negative. The reality, if we look at the CNX reality, you will observe that the momentum is negative, but the trend has started moving up well. Now here again, we are coming back with a structure which has really broken one good pivot point, like what Nifty has done. Having another handle is something that I would love to have, but otherwise also we are pretty safe. We are running pretty good, near from the bottom, but moving upwards. A bit of base formation is more welcome, but otherwise also with the news in pipeline, this thing can really work out very, very well. So reality is something which is good. And then, as I mentioned to you, the impact of the budget will slowly move into the impact of the budget to the impact on the indices. So next you see is consumption and auto. Okay. The beauty in auto and reality is that they are more safe than FMCG. Now you'll ask me why, we are having this thought that reality and auto are more safe than the FMCGs in their valuation perspective. So if I really take you to the valuation part, there's a good thing that they have added into the screener.in nowadays. This is something which was introduced around a year and a half ago. You can put up your indices also here. So if I put here the Nifty FMCG, okay, the thing you are going to observe here is that in terms of the valuations, in terms of the valuations, we are above the multi-year average. Okay. So I'm looking at around 5-year average. If I look at it, I am pretty up from it. So this is not really signifying that I'm that safe. Okay. Because valuation wise, still I'm above the average of last 5 years. Now, if I move on to something which is next, that just to compare, we will look at the valuations of Nifty Auto. If I look at the valuations of Nifty Auto, now here the things will start getting more aligned for us. So here you can see for the PE ratio, okay. Can you see here, we are below the multi-year average. So 5-year average, if you see in case of the Nifty Auto, we are below the average PE. So this accounts for a lot of safety in a way. Yeah. Then the third sector which I was telling you about was reality. So if I look at Nifty reality, now in the Nifty reality, if you look at chart, you look at the P ratio and look at the 5 years, you will suddenly realize here also we are below the averages. So all in all, you can observe that for auto, for reality, it is really good situation where the valuations are comfortable. The valuations are comfortable and fundamentals are improving. This is the killer combination. Let it be stock, let it be an industry. If your valuations are comfortable and the fundamentals are improving, this is a very good sign. And that is what I can see in both auto and reality. Now, coming to FMCG, yes, these stocks have gone nowhere in the last 2 years or so. But the fundamentals have also not gone somewhere to become aggressive over here. So, though as a bet for short term with the people thinking, and another part is the if you look at the three sectors, no FMCG, auto, and reality, where the FIIs are going to come first. So, in that thought process, FMCG will be the one where they'll be coming first amongst these three sectors. Another favorite sectors of there is the NBFCs, which will get a big boost if the interest rate goes down in this MPC meeting. So, though everybody is talking about the consumption side, the FMCG, the auto, and reality, the guy who is in waiting is also the NBFCs and banking. And that fellow can wake up if the MPC gives some positive incentives on the rate side, and that will be a big booster to the whole consumption story as well as the NBFC and banking. So one more booster will get added if the MPC acts positive. So this Thursday, critical day for us to watch. And it gets tough, right? The whole week, last week, we were spending around what's going to happen in budget. And now we are going to spend around 3, 4 days what's going to happen in the MPC. And meanwhile, what is happening on the chart? In the meanwhile, we are observing that, these guys are actually recovering. So these guys are actually recovering. Nifty is recovering. And then if I show you reality, quickly, if I show you yeah, you can look at FMCG. And this is what bothers me. On one side, because of the budget, I am holding my horses. But on other side, the prices have started moving up. So if I wait for another 4 days for things to fall in place for the MPC, then what I'm going to realize that somewhere I have missed a bit of a bottom. Becomes tricky. And that is where, you can think about pyramiding, you can think about getting partially in, so that even if the things reverses, damage is less. And if things go good, you can top it up from there. So the thought process of pyramiding comes where, the overall feel is there, the gut feel is there that we are going to move up. Charts are also supporting it, but there is some event in waiting. In that cases, definitely going partial is going to give us a good idea about what to do, right? So we looked at the three sectors. If I look at the sector wise, we looked at the three sectors: reality, FMCG, and auto. All three are related to consumption. Behind them, slowly, what we talked is also happening. The Nifty FinServs and Bank Nifty are coming up. And very clearly, you can see these are the sectors which are in a better relative strength than Nifty. Mind you, what is the definition of multi-bagger? The multi-bagger definition generally we understand is that getting the stock become 1x, 2x is something like a multi-bagger. But another very simple definition of multi-bagger is that if you are getting returns which are better than the markets, which are in the multiple of what Nifty is making, like Nifty is making 15%, if you are going to hit 30%, that's a multi-bagger return for that particular year. So if you're looking at a CAGR to kick out at around 20 to 30%, 35%, even playing on indexes is going to help you achieve that. How do we really do it? It's all discussed in my bottom fishing program, that going away from this cracking and running behind one stock, another stock, another stock, another stock, if we just track the sectors, we can mix and match and be ahead of Nifty and end up being better than Nifty. Simple logic I'm going to show you over here is that look at the sectors where the runners happen better than Nifty this time. So which sectors I should be in to enjoy this recovery or to get a return better than Nifty? Very clear. I should be in reality. I should be in consumption. I should be in auto. I should be in FMCG. I should be in banking. Keep watching this through the year. Am I ahead of where Nifty is going? Am I ahead in the sector which is better than Nifty? Am I ahead in the sector which is better than Nifty? Logically, the simple logic tells you that your return will be better than Nifty. Okay. Simple thing. What I try to really propagate in my discussions to you, all you guys, is that things are simple. You don't need to really do a deep dive everywhere. A common sense approach can also give you uncommon results in the market, right? So bit of positivity overall, and these are the sectors where the focus should be. And within them, I've told you, valuation wise, the safest one looking here is auto and reality. If you want to get faster returns, reality is the one which is highly volatile, gets you good return also. Auto tends to be really aggressive when it runs, okay, but not as aggressive as reality, but not as dull as FMCG or pharma. So auto is something which shows a good level of run up. It moves pretty fast. Okay. So keep a watch on these two guys, reality and auto. And FMCG, to that extent, I would say that you can be there, but given a chance, try to move to reality and auto on a higher weightage. Okay. Just to get aligned with what can happen at a higher probability rate is that Nifty, reality, and auto are going to run up faster than FMCG for now. And watch the MPC. If that comes positive, even the banking and FinServs are going to really move up very strongly. Yeah, I cannot talk much about these price charts because that is where the new BSE regulations are. So I'll keep my mouth quiet over there uh, till I get more clarity about what really they want to do over here. Last thing I want to get is into unnecessary hassles on the regulation side. So yeah, we look at the weekly jumps. Yeah, very confidently things are aligned with the sectors that we are seeing. Even yesterday, like I told you, no need to run through too many newspapers and all that. You can clearly see that the consumption side, the budget has been good. Auto, FMCG, and reality is moving up faster. Okay. Sectorally, No, sectorally, I'll try to look into the case of a small cap also just to get you some ideas. Let's look at the Nifty mid cap chart. So here also you will observe that we are making a, a bit amount of recovery over here, but still a good distance to go before we become really confident. Okay. And if I look at small caps, how it is looking, I'll not really go into study of these levels because rarely we would be observing them. We'll be focusing more on the side of the Nifty itself to get an idea on levels wise. So here also, yes, the recovery is coming very much like what is happening in mid caps. As we know, the breadth is not that good in small caps. So try to be on the safer side. Try to avoid mid caps stock picking. Try to get more stock picking on the side of the large cap is something that we can do. Again, as I tell you that we are still not in a positive momentum, but trend in most cases has turned positive. So with respect to the trend, yes, thin positions and pyramiding is something that I am doing. I would leave it up to you and your advisors how you would like to go ahead from here. Okay. So this is all about the weekly review. I hope it is giving you good clarity. Gold bees we continue to hold. Silver bees I continue to hold. An addition of the mid caps and small caps and the sectorals partially. That is what I'm doing. Pyramiding is what I'm doing because I see that though the momentum is not positive, the trend has at least started moving upwards. As it gains strength, yep, as I see this riskometer becoming more green, the weightages are going to increase from there. Got it? Now, keeping up to my promise of last time that we should be talking about the diamonds in the dust, right? Now, due to all the regulatory thing, I'll not be talking about the price over here. Though price is the component that you can also look at it and get an idea about it. If you still want to discuss more, you can always join into my programs. And where are my programs hosted? So in the bio of this particular video, you will always find there's a link given for my set of courses on which I am typically working upon. So if you look at this particular month, I am running live sessions around two strategy programs. One is the weekend investing, and another one which I'm working upon is the breakout momentum. So breakout momentum and weekend investings are the two programs that I'm currently going live with. And this diamond to dust, the approach and its scanners and all that is something that I would typically going to discuss in my Turtle Club. Now, Turtle Club is a more committed folks around my theories, around my approach to the market, and that is where as on the go I evolve my strategies because sometimes looking at the market you build scanners, you build your approaches, so that is something is more lively discussed over here. So diamonds in the dust, if you really look at it, how it is coming up for me, so I've taken typically all the stocks which are golden in category. Okay, so platinum are the extremely great stocks, golder ones are reasonably good stocks over there which we can track, and as I go through them, I can bring up certain names for you. You can yourself research on it. So one of the good ones over here is the one is the Inox Wind over here. So if I look at Inox Wind, the fundamental wise, the best part has been its quarters. Let me quickly look at the quarters. So you can observe over here the stock which is kind of beaten down from its top. The stock which has kind of beaten down it from its top actually has its best quarter going for it. You can observe best quarter in terms of revenue, best quarter in terms of the operating profit, and then margins are reasonably solid. The second best, okay. And then you can observe overall PAT is also very strong. There is a component of other income. Always you are analyzing, try to compare EBIT wise so that this one-time income issue doesn't bother you because other incomes are typically one time. You cannot take it as a trend, right? So still a very solid growth that has come in. If you look at quarter to quarter, if you look at YOY also, it is literally doubled a bit. Revenue just bit left from doubling, but This is a double EBIT. And if you look at the investors part, you can see promoters are running close to 48%. The FIIs have dropped off, but DIIs are continuing. Even the big part is that the public has lost its stakes. So the large players are getting into the stock. Public is slowly losing its control. So some of the positives that you can see over here, cash flow from operating is negative. Now that also is because a lot of it comes into the cycles, because you continue to execute the projects and payment come a bit later on. So these parts are negative. So looking at the overall growth that is there and kind of the sector we are in, that is where I see that there is a high chance that this is something which is a kind of a diamond which is stuck in a dust for now due to the market's negativity and negativity towards the green energy sector also. Okay. So this is something that I can look at it quickly and tell you that this is we can work upon. And then another one where we can look out for is I'll go to the specific names that I had pulled up for you. Suzlon Energy is another one that you can look at it. So Suzlon Energy is again into the wind energy sector. Good part is that the performance has been solid. The performance has been solid, delivering again best of its quarter ever, while the prices are stuck up in a rut because of the recent crash that has come. So I cannot really talk about the prices, but you can yourself observe on the chart, heavily corrected, and that is where the chances are there that we can run up pretty well. And as a sector, this sector has been beaten down because of the strong rally that it had, and then people started booking profit, and in the panic, the falls have come in. These are some of the random names that I picked up from the scans that are there. Now I'm going to look into the specific names which are aligned to the sector, which are aligned to this sector, which are getting a strong hand due through this budget, and they have started building up a very good base. Okay. So in them, if I come to the first sector to focus upon, that would be the reality sector. Some of the names which are fundamentally looking good to me is Anantaraj. Anantaraj, the overall operation wise, if you see the peer analysis itself, if you look at it, this is being a real estate stock. The some of the things that you can observe over here is that the good part is that it's getting its strength during the day, the run up it has got, and the PE valuations are aligned to the industry, not far off. And earnings, if you see, have been pretty good. You know, the EPS growth in the midterm is 45%, short term is 4.5%, and the behavior of this comes through the quarter to quarter analysis. You can see over here a steadily growing business. Yeah. Can you see the beauty? This is a real estate business. Since December 22, it has not got a quarter where it has corrected. Revenue has been moving up, operating profit has been rising, net profit is rising, EPS is rising, and again a very solid quarter. So Anantaraj is into the real estate. You can understand it is more towards construction of IT park, hospitality, SEZs. So very high margin kind of a real estate side they are getting to, and that is what is helping them over here. ROCE of 8, ROE of 8 is within that sector, looks pretty good. And one thing that bothers in reality sector is debt to equity, which is very, very healthy situation. Okay. Let's look at the investors, 60% stakes, majority stakeholders, solid. The public losing its stakes, giving it up to the stronger hands, positive. So have a look at Anantaraj. This is something which I take it as a gems from the reality. Next gem from the reality is Oberoi Reality, a renowned name, very reliable name in the market of Mumbai and the greater Mumbai, right? Over here again, you will find the very efficient ROCE and ROCE. Beautiful, good, efficient, debt to equity fully under control. Margins here are something subjective. I would really not comment when I talk about reality business. There's a lot of things are happening across the years, what valuations you get. P by E, if you see, look at 26, and if I put it on the P by E analysis for 5 years, you can observe this is cheaper than its multi-year average. Why this is happening? Because price has corrected, price has corrected, but performance has grown over a reality. Now, this is something that you can track over here. So, along with the Anantaraj in the reality sector, have a look at this good gem, steady growth over the year for sure, because these businesses have their own quarterly fluctuations. I would really not be serious about it, but the general trend is pretty positive. And this is where I'm thinking, look at it. This is another one of its best quarters. So definitely we should be looking at within the reality sector, Oberoi also. Then coming to the FMCG, which is the next sector, which is running good. I've picked up something which might be overlooked from your side, and that is Hindustan Foods Limited. Now, why I'm taking HDFD is, it is a kind of a secondary level player in that sector. Like it has clients, multiple big FMCG names as its client. So if you really look at its details, so it has got really kind of a very strong brands with which it is working as their co-supplier, like it is working with HUL and other manufacturers and producing for them also. And recently what they have done is that they have put up their own greenfield ice cream facility into their plants, and then they have also moved into the shoe brands. So you would have heard yesterday that there is some incentive that is being given to the leather industry also. And then we already know the consumption story coming up strongly. And boots, shoes are part of the consumption story, as well as the packaging it does for the big names. You can see over here, strong clientele. HFL enjoys a wide range of both domestic and international clients like HUL, Bata, PepsiCo, Wipro, Godrej, Hush Puppies, US Polo. So we don't know whether HUL will run. We don't know if the BBL is going to run, or we don't know Godrej Consumer is going to run. But if I just get into with something which is supplying into all of them, the benefits will gather over there, high chances. And this is something also which has been hit very badly. The ROE, ROC look reasonable, and since it is kind of a lower end kind of a work, the margins are not strong, but the growth over here you can observe is that the growth again is best of its own quarter. Not talked about that much, not really uh, understood that much when you really talk about FMCGs. But this is something which is looking interesting to me. Let me just go through it for the valuation charts. Price, I cannot comment. Yeah, you can observe here. Again, we are into that ideal situation. Though the FMCG sector is running above its 5-year average, but this stock is valuation wise also cheap. Have a look. This is an interesting one onto the FMCG. Then on the FMCG part, I am going to look at two stocks, Swiggy and Zomato. Financially, if you really look at them, they are on the edge. Zomato has improved its profitability and started becoming profitable at least, while Swiggy is something which is yet to get into the positive side in terms of profits. But why I've picked up these two, they are into a really upcoming sector in its own. The whole idea about the quick commerce, the whole idea about ordering food and all that is pretty new to the market. If you look at it, these things are still new to the two-tier and three-tier cities in India. Okay, we have been seeing them in the first tier metros, second tier for at least around 5 years, but that also they have matured through this journey. So what was Swiggy, what it was doing 3 years ago is way different than what it is doing today. Zomato, what it was doing 5 years ago, it was just talking about, getting the reviews for eateries and hotels and all that, and then drive their marketing and all that. But suddenly it changed into food delivery also. Then they are also getting into the quick commerce as well as Swiggy, which was earlier only working on food. You have started seeing that it has started giving now detergents, FMCG in through the Insta. Plus, they have also started moving into electronic goods now. And again, they have moved into quick commerce. You ask for it, and within 10-20 minutes, you get it. Now, these are the two big names. Okay. And this industry is still in a nascent stage. Forget about the books for now. You can yourself feel that these are the services you use every day and you feel good about them. You know, as a service provider, they are doing well. Of course, we hate when they have started adding their costs of delivery and platform cost and other thing. But if you invest into them, that is positive. Okay, so this money is going to add into their books, is going to help at least my stock price move above, right? So when it comes to the consumption stories, for a long term, look at these two stocks. Okay, real long term, not 5 years, not 6 years, maybe a decade or so also, because we are yet to cover a lot of the population over here. They are diversifying in terms of service provisioning they are doing. They are going to diversify in terms of the population or the coverage they have in the country. Lot of growth ahead. Lot of support that has come through this budget is the insurance and other provisioning that the government is trying to bring up regulated into the gig workers also. So the gig workers are nothing but people who are working along with Swiggy and Zomato. So there is a push, a focus by government on this sector that will also help bringing in better quality and more acceptability to this business. Okay. So keep a watch on these two names. These guys are very shiny diamonds in a deep dust for now, I would say. You know, at some point, I would hate the kind of e-commerce story, but when you really see it working in front of your eyes and you see they have charges, started charging platform fee, they have started charging for packaging, you start realizing that they are focused towards profitability. The same thing was there in telecom also. If you remember, telecom rates were very, very low. 3 years ago, all these businesses were failing. But as it happens, as was the plan of the big players to kill the smaller players, once they got the dominance, they have started increasing the service and the price charges. And then now what is happening? They have moved into profitability and they are more established. They are the growth these stocks have shown, at least the Bharti Airtel is phenomenally within the last 2-3 years. All because the ARPU has started increasing. Same is happening in this sector. One, their confidence in asking for more charges is growing up. So profitability is coming in. Plus, remember the whole unattended to section of the population in India. Huge market ahead. So really fill it and kind of forget it is something you will have to look into these two cases. If you're going to watch these stocks, I would say have a more kind of a more flexible approach towards the volatility, because this is something we are looking for long term, or have a idea that okay, I may not absorb its volatility, but I will keep tracking. If it is working well, I'll always enter it, and if it drops down, I'll get out, but I'm not going to forget this stock, because either you go piece by piece for every upswing or remain in it for long term. There's a great potential in this. So remember these two names. 5 years from now, I think you should be thankful for what discussion we have just had. So going beyond chart and going beyond the typical fundamentals that we look through the numbers, this is more an opportunity in terms of scope it has, in terms of the quality we see in their services and the focus that is coming from the government, right? So that covers the FMCG part. I'll come to something which is more onto the. I'll just have one stock which is around the capital goods sector, because I like this business for its very consistent performance. This guy is into, this is Shanti Gears, by the way. This is into manufacturing highly specialized gears, gearboxes. So this business is a high mode business. Okay, range of customized gearboxes, loose gears, worm gearbox, and helical gearbox. So you can observe this is something which is highly technology oriented, high precision oriented, and involves customized manufacturing. When it comes to customization, you really don't have much players in this area. So competition is less, and the result of high quality and low competition is typically you will find a good margin that they have, good ROC, ROE they have, right? So no debt. Absolutely. If you're earning so much from the business, why should I go for debt? I should be able to fund my growth myself. Dividend yield of 1%. Nothing small. This business is running very well. This is a business which is running well for a long term. And today, valuation wise, it has gone cheaper. So keep a watch on this guy and let's look at its quarter. You will feel that, my goodness, how some businesses are running in the market and not talked about that much, not much hype. You'll not find this stock is running like a rocket. Rarely it does that, but it crawls, 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 and makes money for you. So here you can see best quarter again, best quarter. Okay. And then when we look at it in terms of the compounded price CAGR, this year it has corrected. But look at its CAGR in the past 3 years, 43%, 5 years, 39%. This year, minus. You have a chance here, right? ROE improving over the years. Then profit growth holding out well, holding out pretty well. And same is about the sales growth also holding out pretty well over a longer period. So not much talked about. Crawler on the chart, I would say I cannot show you the chart because of the price constraint, but it is a crawler on the chart. Yeah, let's talk about 3 months ago. Maybe, yeah, I can talk about 3 months ago here. Just put up the price chart and look 3 months ago over here. If you look at this is a 5 year chart and you yourself can observe if I really go how it has been moving. You see, it is moving along the long-term averages, not really go farther from them and doesn't make big peaks, but crawls along it, right? Crawls along it year on year. And this is where you can approach. I think if I go 3 months back, maybe I'll put myself over here. So you can observe how well it is trending. And recent correction, good opportunity that you can think about, right? Valuations wise, I can tell you that price wise, you're smart enough, you can figure it out yourself. Take advisor help and go ahead. This is a good, simple stock. I'm telling you, nothing gung ho big about it. Very silent crawler. Then the third one, we had the auto sectors. We covered reality. We covered a very small example about, we covered FMCG also, small example in the capital goods. Hero Motor Corp, yeah, with 1 lakh more in the pocket of somebody who was earning around 12 lakhs, 15 lakhs, it means a good amount, healthy amount, right? Can he buy a car with that right away? Maybe not. But can he buy a two-wheeler? Highly possible. So this is the sector where I am feeling the two-wheelers are just going to get a big boost. You know, within 1 annum, I am able to cover its cost for, yeah, and then you are going to also become very comfortable to even buy a two-wheeler on loan, right? Plus the prosperity that is spending in the rural area. You already have the Ladki Behan spreading out. There's another initiative that has gone into the agricultural developments, agriculture focus, prosperity in the rural side. All this spending is going to add up a good, healthy ability to buy stuff in the rurals, and rurals are dominated a lot by two-wheelers rather than the four-wheelers, and this stock was beaten down. It was beaten down very strongly recently, uh, but valuation wise how it is going you can quickly see cheaper than its, or it is at its multi-year PE average. Multi-year average PE पे आकर के ये स्टॉक बैठ गया है. Good opportunity. Nothing else. As far as the business goes, steadily it is delivering. There is a dip in September. December results are expected. No, this is running fine, right? This is running fine. Bit of dent here and there, but nothing going amiss over here. There is a change in leadership which might be creating these shock waves. Be observant about it, but ये जाने वाला कहीं नहीं है. They are doing well in EVs also, right? So very healthy stock, heavily beaten down recently. And if you look at the charts, we are going to just watch for them. Yeah, 3 months ago, you can observe over here. If I cut it from the month of around, see, it is pretty much running strongly. Again, you can observe doesn't correct that heavily. Doesn't correct that heavily. Tends to trend very well. Doesn't fall much also. This is a good long-term story and available at a good dip that you can observe. So PE ratio also you can observe where we are seeing dip and the stock really stuck up. It was due to its performance. You can see this glut that has come into the auto. Yeah, post COVID times, this was the problem they are having. But now healthy growth on track. So growth is not damaged, but prices. What happens to the valuation? It gets cheaper for us. So big name, I'll not deep dive into it much. Less riskier thing, large cap, and you can see high ROC. Absolutely not much of a debt. Very reasonably good OPM, and public holding is below 10%. और जीने को क्या चाहिए? A big large hand are sitting on it, and you just have a small bits and piece to work with. So looking good. Hero Motor Corp, I think market did a mistake. Irrational behavior has given us a good opportunity. Next one is TVS Motor, another big name in two wheelers. What to say? While this has been, I think, a front runner in the two wheelers through the last 2 years, so working out pretty good. Over here also you can observe the P is something where you might not see a comfort over here. Let me check. Yeah, P is something where you might not see a comfort over here. But why I'm feeling strong about it is that as far as the price goes, this trends up very well. Superb trending moves it has given through the last 2 years, just going up. And exactly you can see for the 3 months ago data clearly shows it runs in a trend. Well, good, fine for us. And the recent correction giving a good opportunity as far as the quarter growth goes, pretty safe. You can observe steady growth, not much of fluctuations, having a varied kind of suits to offer on two wheelers, has EV, has bikes, has scooties, and good market standing. Yeah, this one is a solid one. Again, got trapped due to this sudden fear, panic in the market. And you can observe the public is really holding very small quantities. Other guys are holding it pretty tightly over here. So that's why TVS Motor, Honda Motors, just diamonds in the dust, about to shine, will start shining, right? Then coming to the consumption, further thing is something that I will look into you for you is the Trent Limited. Now, Trent is something, if you look at valuation wise, it is we're at a very high valuation, though it shows its 5 year average. I think this average has really got skewed because of the massive run that it has had through the last 2 years. And even at the valuation of around 162, it shows it is cheaper than the 5 year average. So this has been on a fabulous run on the back of the Zudio. The whole idea about Zudio is running solidly everywhere. All the fashion streets that we used to have in the cities and all that are facing big competition, and their spread is quite deep in the cities. Like I can tell you, from my place where I'm staying, there are around three Zudios which are at a distance of 3 kilometers. Now it is just like me that I go to one store, then if I don't get something, they tell me go to the next one, you will get there, I get it there. So these all three stores are literally within 3 kilometers from me. Pricing and all that, it's pretty affordable. That's why even general public, those people who are financially challenged also are preferring to go to Zudio, and something that you get at a very much matching prices of what you could get online also. So good growth ahead, and yes, the price run up that it had is has been very solid. If I look at the minus 3 months data, you can see steadily rising, and then the panic, and then the correction. What is the impact on business? Business is running strong. So business is still running strong. The December results are yet to come. Keep a watch on them. Definitely, while everybody was waiting that I should get a chance to work, to get into trend, this is your chance. So these are some of the gems that I've discussed with you. Keep looking at them, keep watching at them. None of them are like buy recommendation from my side, but going with the concepts that we want to figure out the stocks which have got dented recently, but not much in impact on their performance, valuations wise, how they are looking. Sector wise, we try to move something which is getting moved with the budgets push. So overall, what do you think about these talks? What do you think about our today's discussion? Do definitely put up your comments over here. As always, I would love to work along with you guys. And something which I can tell you that if you're somebody who is not into the market now, I would say this is the right time to get into the market. You tell me why, sir, in this negativity and all that, why you want me to enter into the market? My dear friend, the problem here is that the equity markets become famous and get public acceptance only when they are at the highs. I was yesterday wondering, no, why do people lose money in the market and why they are scared about the market? The reason why you're scared about the market, always the number one reason is that you make losses in it, and that's why you are scared. Now, where do you make losses? The problem here is that the new investors typically do not come in correction. The new investors do not come into the market during correction. That is the big problem. Believe me, if I really look at it, why people are panicking to be in the market, they are afraid to work in the stock market. The reason is that they try to enter when the market is at the top, because that is where they come to know that चुन्नू ने पैसा बनाया, मुन्नू ने पैसा बनाया, अब हम भी पैसा बनाएंगे. That kind of thought process that hurts. Now I would say work on a reverse psychology. When nobody is ready to buy, please come and start your journey in the markets. Guys, please come and start your journey in the market, because here the high probability is there that you will make money. And when you will make money, no, you will become confident to work in the market. You will get that very easy start now. We are not at the peak, we are at a trough. Here, the losses to go through will be less. Chances of we going down are comparatively much less than the chances of going up. Okay, risks are always there in the market, right? Everything I'm saying is of no use if tomorrow the prices drop. So we work with stop losses, that is there. But your high chances of winning in the market is when they are consolidating or they have cracked down and they are moving up. So these are the times. If you're not in the market, please start learning, start studying, please start executing your transactions in the market. Within, I think, I think so from 8 months from now, you would feel that you missed an opportunity actually. And that time you will join when it is at high, then you'll get frustrated when it gets consolidated, or you'll get frustrated when it corrects. Then you will put the blame on market, that this is satta, this is matter of luck. This is not the place where a normal person should be, all because you start your journey at the wrong place. So if you're new to the market, if you're learning, if you want to make a good beginning, this is a very good place that you can start at this stage in the market, where momentum is low, but trend I can see is moving upwards. You can start thin, you can start small, but high chances you will be seeing green on your portfolio, right? So most of these ideas are that definitely I keep on sharing. You can always become part of my journey on Twitter. My handle on Twitter is Million for Profits. You can become a part of it. You can also download my app, Learn to uh, Invest on the Android, or get in touch with me. I will definitely share with you all the steps and how we can work together. So good learning times ahead, good earning times ahead. The biggest thing that we are looking currently, that is I am looking for, is the MPC. What does the MPC do? If they also work out well if they align with what has been done in the budget. Definitely, there's a lot of positivity ahead. I've shared with you the levels from where you should be away from the market. Currently, it is running at, I think, 23,000. So if you go below 23K, make sure that you are again out of the market. If we cross 23,800, the breakout and trend following is up. Currently, it is a season of bottom fishing. Currently, it is a season where new players can get into the market and actually be more on the profitability side, become more confident about working in the market. With those all positive thoughts, I say bye bye to you. Best wishes for the upcoming week. And if you want to learn, definitely get in touch with me. My current live programs of breakout momentum and weekend investing are on. Happy to engage with you always. Take care. Bye bye.